All right, let's talk about Palantir. This is one of those stocks that people either absolutely love or think is completely insane. For some, it's the future. For others, it's a huge gamble. So what's really going on here? Let's try to piece this puzzle together.
To really get the controversy, you have to start with this one number, 500. Palantir's price-to-earnings ratio is floating around 500x. Now, what on earth does that mean? Well, to put it simply, if you bought a piece of the company today, it would take 500 years of their current profits to earn your investment back. Yeah, 500 years. That's a number that makes most old-school investors just run for the hills.
And yet, despite that absolutely wild number, Palantir is still one of the hottest, most talked about stocks in the entire AI world. So that's the big question we're tackling here, right? Why are so many smart people betting the farm on a company that looks this expensive on paper?
To answer that, you have to first understand the bull case. This is the argument that Palantir isn't just another company selling software. No, the people who believe in it think it's a full-blown revolution. You know what the best way to get it is to listen to their customers. This quote right here isn't some slick marketing line. It's what a real user said. When your customers describe your product as magic because they literally can't explain how it works, you know you've got something special. They're not just buying a tool, they're buying a result that feels impossible.
So what is this magic? How does it work? It's basically a three-step process. First, Palantir's platform just sucks in all of a company's messy, chaotic data. We're talking everything. Then, it digs through every single part of the business to find all the hidden spots where money is just leaking out. And finally, it gives them a clear list of things to do that can unlock huge new profits.
And because of this, it's earned this incredible nickname, the Grift Eliminator. It's a bit of a blunt term, but it's spot on. The software is like an MRI for a business. It finds and cuts out all the waste and inefficiency that no one even knew was there.
And you know what? The results are starting to get noticed. In the US commercial space, their growth is actually speeding up, jumping a staggering 93% recently. They also just hit their first ever billion-dollar quarter. So for the believers, this isn't just hype. It's proof the revolution is actually happening.
But, and this is a big but, that is only half of the story. For every person screaming revolution, there's someone else screaming bubble. They see a classic financial disaster just waiting to happen.
I mean, you can really boil the whole debate down to what you see here. On one side, you've got this incredible, undeniable growth story. But on the other, you have some massive red flags that are just impossible to ignore.
Let's break down those worries. Even looking forward, the valuation is a sky-high 240 times future earnings, a number some analysts literally call obscene. Then you've got legendary investor Stanley Druckenmiller, who just sold off his entire stake. And maybe the biggest warning sign of all, the CEO, Alex Karp, has been selling his own shares pretty consistently. When the pros and the insiders are heading for the exit, you have to ask yourself, what do they know that we don't?
So you've got the bulls and the bears. This brings us to the final and maybe most important way to see Palantir. It's not just about one company. It's a huge bet on a completely different future.
Think about it. A revolutionary company, a valuation that looks totally bonkers, and everyone arguing about whether it's genius or madness. Have we seen this story play out before? Oh, yes, we have. And the comparison is pretty fascinating.
Let's go back to the dot-com bubble. Amazon had captured everyone's imagination, but it was barely making any money, and its valuation was in that same 200 to 300 range. The experts said it was a joke, that it was doomed. Then the bubble burst, and the stock got crushed. But anyone who held on through that pain saw it become one of the most powerful companies in the history of the world. The bulls today think Palantir is at that exact same point in its story.
And to really get that, you have to get the CEO's core philosophy. He calls it downstream value creation, and it's a pretty radical idea. He thinks it's crazy to sell software for a flat fee. Instead, he believes the price should be based on the actual real-world value it creates for the customer.
And listen to this. He's not just talking about his own company. He truly believes this is where the entire tech industry is headed. So a bet on Palantir isn't just a bet on their software. It's a bet that this idea is going to completely change the rules for how all technology is bought and sold. And that brings us right back to the beginning. Is the market crazy for valuing Palantir this high? Or is it one of the first to see a future where we judge software not by the profits it makes for itself, but by the massive value it creates for everyone else? That right there is the multi-trillion-dollar question at the very heart of the Palantir puzzle.
All right, let's talk about Palantir. This is a company that's right in the middle of this whole AI explosion. And its stock, it has just gone on an absolutely incredible run, which is everyone asking, is the journey just getting started? So, after a stock shoots up nearly 2,000%, you have to ask, right? Is now really a good time to jump in? Is this a genuinely smart buy? Or is it possible the hype has gotten a little ahead of itself? Let's dig into both sides of the argument. First up, let's look at the bull case. There are some really powerful reasons why investors are so excited about Palantir, and it all starts with its absolutely staggering growth. Okay, let's just let this number sink in for a second. 1,900% in just 3 years. That is just phenomenal. To put that in perspective, if you had put just $100 in back then, you'd be looking at almost $2,000 today. Now that is the kind of growth that makes everyone sit up and pay attention. And it's not just the stock price that's soaring. Their U.S. commercial revenue, that's money from private companies, shot up 93% in the last quarter alone. This is huge because it shows Palantir is breaking out from its government-only roots and really making waves in the private sector. So where's that revenue coming from? Well, look at the customer growth. Just 4 years ago, Palantir had only a handful of commercial clients. Today, they have 485. That is some seriously strong demand. So what's the engine behind all this? A big piece of the puzzle is their artificial intelligence platform, or AIP. It basically makes it super easy for companies to use cutting-edge AI on their own data. You combine that with the fact that they're now profitable and demand is booming, well, you've got a recipe for explosive growth. And if you listen to their CEO, Alex Karp, he thinks they're just getting warmed up. He's on the record saying this is just the beginning of something much, much bigger. That suggests, for all this incredible growth, Palantir's best days could still be ahead. But, that's only half the story. Every great growth story comes with risks, and for Palantir, they're pretty significant. So now it's time to look at the other side, the bear case. And this really gets to the heart of the matter for a lot of Wall Street analysts. The business might be great, sure, but is the stock price itself just too high? So how do we even measure how expensive a stock is? Well, a common way is the price-to-earnings ratio, the PE ratio. And just for context, your average company in the S&P 500 trades at about 25 times its earnings. Palantir, it's trading at over 500 times its earnings. That's not just high, it's an astronomical figure. And because of that wild price tag, most of the pros on Wall Street are pretty cautious. A huge majority, 68%, rate the stock as a hold, not a buy. They're essentially saying, hey, the current price probably isn't a great entry point. This quote from well-known short seller Andrew Left really sums up the skepticism. When the valuation gets so extreme that experts are literally calling the numbers absurd, that's a major red flag for any investor worried about a potential price drop. So you can really see the two sides of the coin here, can't you? On one hand, you have the bulls, the optimists, who say Palantir is a clear leader in the AI revolution with absolutely explosive growth. But on the other hand, you've got the bears, the skeptics, who look at that sky-high valuation and say, look, all that future success might already be baked into the price, and that creates some serious risk. And that really leaves us with the big question, doesn't it? Is Palantir one of those long-term winners where the risk is absolutely worth it? Or is this a bubble just waiting to pop? Do you bet on the tech and believe they'll eventually grow into this massive valuation? Or do you just see a stock that's gone way too far, way too fast? Honestly, how this plays out could be one of the defining stories of this whole AI era.
All right, let's jump right in. We're going to connect some pretty big dots today. On one hand, you've got this major signal from the Federal Reserve. A rate cut is probably coming. And on the other hand, you've got a super popular and kind of controversial stock, Palantir. So how do these two things connect? That's what we're here to figure out.
This is really the question, isn't it? The Fed finally cuts rates. So, is that the starting gun? Is it time to pile into those high-growth stocks you've been watching? Or is it actually a red flag, a sign that maybe the economy is a little shaky? Let's unpack that.
So here's how we're going to tackle this. First, we'll look at what history says about rate cuts. Then, we'll dive into all the big news swirling around Palantir. After that, we'll get into why the analysts just can't agree on it, and I'll lay out a potential playbook for you. And finally, we'll tie it all together. Simple enough, right?
All right, section 1. Let's talk about that rate cut. To figure out where the market might be going, it really helps to look back.
What's happened before when the Fed has done this exact same thing? Okay, this is super interesting. So trader Mark Minervini did the homework. He looked at the last 13 rate cuts. And in the short term, like the first 30 days, it's basically a coin flip. The market went up 6 times and it went down 7 times. You just don't know. But get this, if you just wait a little longer, just 3 months, the picture completely changes. The market was up 12 out of 13 times. 12! That's a seriously bullish signal.
And we're not talking about small gains either. On average, the S&P 500 jumped more than 5% in those 3 months following a rate cut, assuming we weren't already in a recession. So what that tells us, historically anyway, is that even if things are a little shaky at first, that initial volatility tends to fade pretty quickly and turn into a really solid rally.
Okay, so that's the big picture market vibe. Now, let's get specific and zoom right in on our case study for today, Palantir. And believe me, this is a company that's been making some serious waves all on its own.
And I mean, what a week they've had. First, they're on the verge of landing this massive, nearly $1 billion deal with the UK military. Then you've got a Mizuho analyst just raving about their astonishing execution and bumping up the price target. On top of that, they snagged this really important cybersecurity certification, which basically paves the way for more US defense contracts. Of course, the market absolutely ate it up, and the stock shot up.
So with all that amazing news, you'd think every single analyst on Wall Street would be screaming, buy, 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 right? Well, not exactly. And this is where things get really interesting and, frankly, a bit confusing for anyone trying to figure out what to do.
Yeah, take a look at this. The experts are totally divided. Out of 20 analysts, a big majority, 13 of them, are basically saying pump the brakes. They're rating it a hold or even a sell. Only 7 are bullish. So what gives? With all this incredible momentum, why are so many of them so cautious?
Well, the answer really boils down to one little number, the PE ratio, or price to earnings. All this really means is how much are people willing to pay for the stock for every dollar of profit the company actually makes. Now, a high PE isn't always a bad thing. It just means that investors are expecting some seriously huge growth down the line.
So, what's Palantir's PE ratio? You might want to brace yourself. It's 276. Let me put that in perspective for you. The average PE for a company in the S&P 500 is somewhere around 25. So yeah, 276 is sky high. And that is the heart of the problem for these cautious analysts. They see all the good news, for sure, but they also see a stock price that seems to have already priced in, like, years and years of absolute perfection.
Okay, so what are you supposed to do with all this? On one side, you have amazing news. On the other, you have this crazy high price tag. It's a classic dilemma. And that brings us to the playbook. Let's try to build a strategy here by breaking it down based on how long you're planning to invest.
So we're going to look at this in 3 chunks, right? What to think about right now, in the short term. What the plan could be for the medium term, say the next year or so. And then how to position yourself for the long haul. It's a simple way to clear out some of the clutter.
All right, let's really dig into the strategy. For the short term, the thinking is maybe just hold or even think about selling a little bit. Why? Well, the stock just went on a tear, and it's pretty common for people to cash in and take some profits off the table. But then you look out to the midterm, and things start looking a lot better. The demand for AI isn't going anywhere, and that huge UK deal should start hitting the books. That's when you might consider buying. Now, for the long term, the idea is to buy on the dips. The company's long-term story looks really strong. But with that high price tag, it's just a whole lot safer to buy when the stock has a bad day or a bad week, instead of chasing it when it's already flying high.
Okay, now for the grand finale. This is where we bring it all home. Let's connect these 2 big ideas, that macro market outlook we started with, and this very specific strategy for Palantir. This is where it all comes together.
You know, there's a great analogy for this. Think of the overall market, all that stuff about Fed rate cuts, as the weather. Some days it's sunny and calm, other days it's stormy and unpredictable. But the actual company you invest in this case Palantir, that's your ship. A really well-built ship can get through some nasty weather, but a leaky ship? That could sink even on a calm day. You really have to understand both the weather and the ship.
And check this out. This is how perfectly it all lines up. That short-term hold or sell advice, it makes total sense when you remember Minervini's data about the market being a coin flip right after a rate cut. It's just too unpredictable. Then that midterm buy recommendation, that lines up with the historically strong market we see 3 months out,
which is just enough time for Palantir's big contracts to start making an impact. And finally, the long-term buy-on-dips play, that fits perfectly in a market that's generally trending up after rate cuts. It lets you be patient and build a position in a fantastic but pricey company without overpaying. So I'll leave you with this to think about for your own strategy. When you're making a decision, what are you paying more attention to? The day-to-day market weather or the long-term strength of your ship and its ability to sail through whatever comes its way? It's something we all have to ask ourselves. Thanks for tuning in.
If you've been following the stock market at all, you've heard the name Palantir. It's got to be one of the hottest, and honestly, one of the most polarizing AI stocks out there right now. Everyone has an opinion. So in this explainer, we're going to cut through the noise, look at both sides, and figure out what is really going on with this company.
Okay, let's just start with the number that gets everyone's attention. Year to date, Palantir stock is up an incredible 376%. Nope, that is not a typo. We're not just talking about a hot stock. This thing has been an absolute rocket ship. So that's why we have to ask, what's fueling this fire, and can it possibly keep burning this bright? So here's our game plan. First, we're going to look at why the hype is absolutely real, what's driving all this momentum. Then we'll dive into the two sides of the debate, the bulls, who see nothing but blue skies ahead, and the bears, who are screaming warning. And finally, we'll pull it all together for your big takeaway.
All right, let's kick things off with that incredible momentum. I mean, a stock doesn't just jump over 300% for no reason. There has to be some seriously good news lighting the way. So what exactly has been happening with Palantir?
Well, just take a look at the kinds of wins Palantir has been racking up lately. We're talking about a massive, potentially $2 billion deal with the UK's Ministry of Defence. That's their first billion-dollar deal overseas. They've also teamed up with the aerospace giant Boeing. And get this, they passed a major cybersecurity audit with a perfect score. That's a huge stamp of approval for big, cautious institutions.
And here's where things get really interesting. For years, everybody thought of Palantir as just a government contractor, right? But these numbers, they tell a completely different story. Yeah, government revenue growth is still great, up 53%, but look at their U.S. commercial revenue. It has absolutely exploded, up 93%. This proves the company is making serious inroads into the private sector, and that is a massive, massive market. So all this crazy growth leads us straight to the bull case. The investors who are still buying this stock, even after it's run up so much, they believe this is just the first chapter of a much, much bigger story. So what are they seeing that maybe others aren't? Well, it really comes down to what the bulls call Palantir's secret sauce. See, it's one thing to build a cool AI model in a lab, but it's a whole other ballgame to actually get it working reliably, securely, and at a massive scale across a huge organization, like an army or a Fortune 500 company. Palantir is a master at that really difficult step, going from a prototype to full-blown production, and that solves a huge headache for their customers. And that potential? It's attracted some really big names. Cathie Wood from ARK Invest, one of the most famous tech investors out there, literally said Palantir is the next Tesla. Now that is not a small statement. That's a belief that Palantir isn't just another software company. It's one of those generational companies that's going to completely disrupt an entire industry. And it's not just one big-name investor saying this. You've got independent, third-party experts agreeing. Top analyst firms like IDC and Forrester, they've recognized Palantir as a market leader in its field. This kind of validation from the pros really backs up the bull argument that Palantir's technology is the real deal and gives them a serious edge. Okay, but for every bull, there's a bear. And the case against Palantir is just as powerful. And to be honest, it's a little bit scary. So to really get the full picture, we absolutely have to understand the risks here. Right? The growth is amazing. The tech gets rave reviews, huge contracts are coming in. So you have to stop and ask yourself, what is the catch? Why isn't every single person on Earth buying this stock? Well, the bears have a very, very clear answer to that. And that answer is this number right here, 134. Palantir is trading at 134 times its annual sales. Let me just say that again so it sinks in. Not 134 times its profit, 134 times its revenue. By pretty much any standard you can think of, that is an incredibly high price tag. And just to put that number into perspective, to show you how wild it is, the next most expensive stock in the entire S&P 500, it trades at 41 times its sales. So Palantir isn't just a little expensive, it's in a completely different universe. I mean, the stock could lose 2/3 of its value tomorrow, and it would still be the priciest stock in the index.
That right there is the heart of the bear argument.
And you know, history gives us a pretty stark warning about what can happen when stocks get this expensive. Just look at Snowflake, SentinelOne, or Zoom. They were all market darlings. They all hit these crazy high price-to-sales numbers, and then, well, they all came crashing back down, falling anywhere from 73 to 90%. History tells us that valuations this high are almost impossible to maintain.
And beyond that insane valuation, bears point to other risks too. Even with all that commercial growth, the company still gets over half its revenue from government contracts, which can be unpredictable. They're also facing some intense competition from the biggest names in tech, like Google and Amazon. And there's some concern that its growth could start to slow down in places like Europe.
So what do we do with all of this? We've got two powerful, completely opposite stories. On one side, you have this mind-blowing growth. On the other, you have a valuation that seems to defy gravity. How do we put it all together and see the big picture?
It really is like a two-sided coin. The bulls see a future AI giant, a company with unique tech that's worth the premium price. But the bears see a classic stock market bubble, pumped up by hype and just waiting to pop, like so many others before it. And what's so fascinating is that both sides have really good points, backed by actual data.
So, what about the professionals on Wall Street? What do they think? Well, it looks like they're caught right in the middle. The overwhelming consensus is hold. Only about a quarter of analysts are saying you should buy the stock at this price. A whopping 65% are basically saying, yeah, it's a fantastic company, but it's just too expensive to jump in right now.
And that leaves us all with the ultimate question. Do you bet on the revolutionary tech and the explosive growth, or do you listen to the warnings from history and that sky-high price tag? Is Palantir truly an AI titan of the future, or is it just history's next big pop? The answer to that is going to be one of the most interesting investment stories we'll see this decade.